What's happening, crypto crew? Get ready for a rapid-fire update that's going to blow your mind. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest moves. We've got crucial intel on major price shifts, groundbreaking strategies, and seismic market events that could redefine everything you thought you knew. Buckle up, because this is the news you absolutely cannot afford to miss. First up is the OG crypto facing a serious reality check. We're diving deep into the volatile price action that has everyone talking, exploring the factors that could be putting it at risk. Get ready for the inside scoop on what's driving these massive swings and what it means for your portfolio. Then, we're shifting gears to uncover a massive liquidation event that has wiped out millions in long bets. Find out who got caught in the crossfire and how this shakeup is impacting the broader market. Next, prepare yourself for a deep dive into the seasonal patterns and institutional plays that could signal a major comeback or signal the end of an era. We're dissecting the data to see if a bull market is truly on the horizon. And finally, we're heading to Japan to explore a bold corporate strategy involving a massive Bitcoin bet. But is it paying off, or is it all about to unravel? We've got all the details on this high-stakes move and its potential impact. Don't go anywhere, because this is Bitcoin Bulletin, and we're bringing you the pulse of the market. Make sure you smash that like button, subscribe, and hit the notification bell so you never miss an update. Bitcoin faces critical test below $108,000. The cryptocurrency market is on edge as Bitcoin struggles to maintain its position above the crucial $108,000 mark, experiencing a notable downturn over the weekend. This price action has triggered widespread concern among investors, especially those who witnessed the asset surge past $125,000 only to see it retract significantly. The current volatility underscores the inherent unpredictability of Bitcoin, leaving many unsettled. Traders are adopting a cautious stance, influenced by several key factors. Wall Street's closure for the Labor Day holiday on Monday added to the subdued market sentiment. Compounding this caution is the persistent fear of a large-scale sell-off, often referred to as a whale dump, where significant holders might offload substantial amounts of Bitcoin, potentially flooding the market and driving prices lower. This anxiety is further fueled by observed large transfers and conversions of Bitcoin from dormant wallets into other assets like Ether, as well as a noticeable decline in investment inflows into Bitcoin-specific exchange-traded funds, ETFs. The broader market sentiment has also been negatively impacted by the performance of traditional financial markets. Declines in major indices like the Dow Jones, S&P 500, and Nasdaq have historically correlated with downturns in the crypto space, creating a ripple effect that weighs on Bitcoin's price. Furthermore, geopolitical developments, including tariff threats and potential political influence on the Federal Reserve, have added layers of uncertainty, making investors more risk-averse. Looking ahead, two significant macroeconomic events are poised to shape this week's market dynamics. The U.S. bond auction, scheduled for Tuesday, will see approximately $290 billion in short-term bonds offered to the public. Such auctions can sometimes reduce market liquidity, potentially exerting downward pressure on risk assets like Bitcoin. On Friday, the release of the U.S. non-farm payroll, NFP, report and unemployment figures will be closely watched. A weaker-than-expected NFP reading, particularly if it falls below 60,000, could bolster expectations for continued interest rate cuts from the Federal Reserve. Such a scenario might provide a much-needed boost to risk assets, including Bitcoin. Digging deeper into the recent price action, a significant whale trader appears to be a primary catalyst for the current challenges. On-chain analytics firm Liquidations reported that a long-term holder, possessing over 100,000 Bitcoins, began selling a portion of their holdings on platforms like Hyperliquid and other marketplaces last Monday, reportedly switching to Ethereum. This selling pressure caused Bitcoin's price to drop from around $114,000 to $108,600 over more than a day. However, once the market identified this as an isolated incident, a recovery began, with Bitcoin climbing back to $113,500 by Thursday night, nearing its pre-sell-off value. Technically, the critical psychological support for Bitcoin is identified at the $100,000 level. Breaching this level could trigger significant downturns and a liquidity squeeze, although a full-blown bear market would require a more sustained downward trend. Ether's key support is currently holding at $4,000. Adding to the complexity, the latest data on the Fed's preferred inflation gauge, the core PCE price index, showed a 2.9% rise in July. While in line with expectations, this marks the highest annual increase since February, potentially influencing the Fed's monetary policy decisions. Despite this inflation data, market sentiment remains influenced by the possibility of a rate cut, with the CME Group's FedWatch tool indicating an 87.6% probability of a 25 basis point rate reduction at the September meeting. But is this price dip a temporary setback or a sign of deeper issues? We'll break down the latest institutional moves that could change everything. Bitcoin liquidation frenzy. $196 million wiped out in long bets. In a brutal weekend for leveraged traders, the cryptocurrency market experienced a significant reset as Bitcoin's price tested its $107,000 support level. This downturn led to a massive liquidation event, wiping out approximately $196 million in long positions across major exchanges including Binance, Bybit, and OKX. The rapid price drop caught many traders off guard, highlighting the extreme volatility and leverage risks inherent in the digital asset market. The liquidations occurred as Bitcoin experienced a sharp decline, fueled by a combination of macroeconomic uncertainty and specific market pressures. Investors were closely monitoring economic data releases, particularly those that could influence the Federal Reserve's upcoming interest rate decisions. Expectations of potential rate cuts were present, but short-term sentiment remained cautious, exacerbated by events like the Wall Street holiday closure and fears of large Bitcoin holders offloading their assets. These factors created an environment ripe for a leveraged shakeout. Exchanges like Binance, Bybit, and OKX are central hubs for derivatives trading, where many participants leverage their capital to amplify potential gains. When the price moves against their leveraged positions, these positions are automatically closed to prevent further losses, a process known as liquidation. The $196 million figure represents the total value of leveraged long positions that were forcibly closed due to the price decline, effectively removing significant capital from the market. This event has several implications for the broader market. Firstly, it signals a deleveraging phase, which can sometimes precede a more stable market recovery as excessive leverage is flushed out. Secondly, the concentration of liquidations on specific exchanges indicates where the most aggressive leveraged bets were placed. The sheer scale of the liquidations can also create further selling pressure as liquidated assets are sold off, potentially exacerbating the price drop in the short term. Traders who had bet on Bitcoin's price continuing its upward trajectory, or at least holding steady above certain levels, saw their investments evaporate. This serves as a stark reminder of the risks associated with high leverage, especially in a market known for its rapid and unpredictable price swings. The events of the weekend underscore the importance of robust risk management strategies, including the use of stop-loss orders and avoiding excessive leverage, particularly during periods of heightened market uncertainty. Analysts are now assessing the impact of this liquidation event on market sentiment and future price movements. While painful for those involved, such cleanouts can sometimes pave the way for healthier price discovery. The focus remains on Bitcoin's ability to hold key support levels, with the $107,000 mark being a critical short-term test. The outcome of upcoming macroeconomic data releases, such as the non-farm payrolls report, will be crucial in determining the direction of the market in the coming days and weeks. While liquidations shake the market, institutional players are making bold moves. What does this mean for the future of crypto? Bitcoin's seasonal crossroads. Will institutional bets signal a bull market comeback? Bitcoin is navigating a critical juncture as it enters September, a month historically known for its bearish tendencies. After a 6.5% decline in August, which marked its first monthly loss since April, Bitcoin has fallen below key technical support levels, including the 50-day and 100-day simple moving averages and the Ichimoku cloud. This performance has reignited concerns about the sustainability of the current bull market, with analysts identifying crucial support zones around $105,240, $101,366, and the significant psychological level of $100,000. A breach of these levels could signal the end of the current bull cycle. The historical data paints a challenging picture for September. Since 2013, Bitcoin has averaged a minus 3.77% return in this month, with 8 out of the last 12 Septembers closing in negative territory. This seasonal weakness is often attributed to factors like institutional portfolio rebalancing and tax loss harvesting, similar to patterns observed in traditional markets like the S&P 500. However, some market observers suggest that Bitcoin might deviate from this trend, potentially mirroring a 2017 pattern where a sharp August decline was followed by a rebound from key support levels. Technical indicators present a mixed outlook. A bearish divergence on the 14-month Relative Strength Index, RSI, suggests a potential weakening of upward momentum. Conversely, a hidden bullish divergence on the weekly RSI hints at underlying buying pressure that could support a recovery. Analyst ZYN has posited that if Bitcoin successfully defends its support zone between $105,000 and $110,000, it could potentially reach new all-time highs exceeding $124,500 within the next 4 to 6 weeks. This zone, previously resistance, has now become a critical support, potentially signaling a trend reversal. Macroeconomic factors are also playing a significant role. The weakening of the US dollar against Bitcoin, evidenced by a 52-week correlation dropping to its lowest point since 2023, is seen as a positive sign. This trend is often linked to expectations of Federal Reserve rate cuts, which could inject much-needed liquidity into the crypto market. Market participants are pricing in a high probability of a September rate cut, with estimates ranging from 78% to 85.2%. However, cautionary voices, like Arthur Hayes of BitMEX, emphasize that a rate cut is not guaranteed, and failure to deliver could introduce market uncertainty. Institutional activity adds another layer of complexity. Despite experiencing $751 million in ETF outflows during August, there has been a notable increase in whale accumulation, with the number of addresses holding over 100 BTC reaching a record high of 19,130. This suggests that large, sophisticated investors are actively acquiring Bitcoin during this period of volatility, viewing current prices as attractive entry points. This contrasts with the outflows from Bitcoin ETFs, highlighting a divergence in sentiment between retail and institutional investors. Looking ahead, the market is anticipating a potential October rally, a historically positive month for Bitcoin. Furthermore, the expected approval of several altcoin ETFs, including those for Solana and XRP, could drive further inflows and diversify investment opportunities within the broader crypto ecosystem. While Bitcoin's market dominance has slightly decreased, the overall crypto market capitalization has grown, indicating maturation and potential for altcoin growth. The coming weeks are pivotal for Bitcoin. The defense of the $100,000 support level will be closely watched as a potential indicator of market sentiment. A successful hold could spark optimism, whereas a breakdown might extend the bearish trend into October. The interplay between technical patterns, institutional behavior, and macroeconomic signals will ultimately determine Bitcoin's trajectory. While institutional players are making big bets, a Japanese firm is pushing the envelope even further. What happens when corporate strategy meets massive crypto holdings? Metaplanet's bold Bitcoin strategy faces share price plunge. Metaplanet, a prominent Japanese firm focused on Bitcoin treasury operations, has significantly expanded its holdings, acquiring an additional 1,009 BTC for $112 million, bringing its total reserves to 20,000 BTC, valued at approximately $2.14 billion. This move solidifies Metaplanet's position as a leading institutional Bitcoin holder globally. The company's strategy, initiated after a major restructuring in December 2024, centers on integrating Bitcoin as a core reserve asset for its treasury operations. The aggressive accumulation of Bitcoin has been financed through various capital market activities. Metaplanet has actively engaged in bond issuances and share offerings to fund its expansion. Notably, the firm has issued millions of new shares and secured bond redemptions totaling $20.4 million. To further fuel its ambitious growth, Metaplanet is planning a public share offering in overseas markets, potentially raising up to $884 million. Additionally, a shareholder vote is scheduled to approve the issuance of up to 555 million preferred shares, which could bring in an additional $3.7 billion. However, this aggressive capital-raising model is currently under pressure due to a significant decline in the company's share price. Since mid-June, Metaplanet's stock has fallen by 54%, a stark contrast to Bitcoin's approximate 2% gain during the same period. This sharp depreciation threatens the viability of its capital-raising strategy, particularly concerning the incentive structure for warrants held by key investors. The falling stock price diminishes the attractiveness of these warrants, impacting the company's ability to leverage them for future funding. Metaplanet's performance metrics reveal both growth and considerable volatility. For the quarter ending September 1, 2025, the company reported a Bitcoin yield of 30.7%, a metric reflecting Bitcoin holdings relative to fully diluted shares. This figure represents a substantial decrease from earlier quarters, where the BTC yield had peaked at 309.8% in late 2024. Despite the stock price challenges, Metaplanet reported a 41% quarter-on-quarter revenue increase in the second quarter of 2025, generating $75.1 million in profit. This profit was primarily driven by recurring income from cash-secured put premiums and operational performance. The company maintains ambitious long-term goals, aiming to accumulate 100,000 BTC by the end of 2026 and a staggering 210,000 BTC by 2027. This strategy positions Bitcoin as a hedge against inflation and a long-term value preservation asset, mirroring approaches seen with companies like MicroStrategy. However, analysts caution that this strategy is inherently risky, especially given Bitcoin's price volatility, which directly impacts the company's stock valuation and liquidity. In a move that has garnered significant attention, Metaplanet has appointed Eric Trump as an advisor. Trump is expected to participate in a shareholder meeting in Tokyo on September 2, 2025, where crucial decisions regarding the company's capital structure and future financing will be discussed. This appointment introduces a notable geopolitical and financial dimension to Metaplanet's corporate Bitcoin strategy, potentially influencing its trajectory in the evolving digital asset landscape. From institutional giants to corporate strategies, the market is buzzing. What's next for Bitcoin? And that's a wrap. Bitcoin is facing pressure below $108K, wiping out $196 million in long bets. We saw seasonal weaknesses and institutional plays, but will it lead to a comeback? Plus, Metaplanet's massive Bitcoin bet is hitting turbulence. Hit that like button, subscribe for more, ring the bell, drop a comment, and follow us on all socials so you don't miss a single update.